Hi everyone. Today's video we're going to look at the mid-year report put out by Boise Regional Realtors Association. It's a snapshot of what's been going on since January of this year in the real estate market in the Treasure Valley. So we're going to take a look at that. There's a lot of information in there. My name is Ian Wolper. I'm a realtor here. I live in Eagle, and I'm recording this in my garage using virtual background. This is a home I sold last year in Eagle, represented the buyers, paid under purchase price, got some concessions from the seller, and the homeowners are very happy and have seen some great appreciation in their home just since last August. So they're happy with the job I did and love living here in Eagle, and as do I. So we're gonna go ahead and jump into this report. I'm gonna share my screen here. So like I said, it's the 2020 mid-year report for residential real estate. And first slide here, as you can see, key market metrics for Ada County. Let me move my little headshot there. And you can see some existing resale. So those are homes, not new construction, as you can see the different chart there. But looking at inventory numbers, you can see there's a drastic decline in inventory from last year to this year. Part of that being the pandemic, part of that just being there's not a lot of inventory going on right now. Days on market is about the same, and closed sales, even with the much less inventory, this closed sales are just about the same, only 200 units different. Median price has gone up, obviously, about 11%. New construction, again, lower inventory, about the same days on market, same number of units, a little more appreciation there. About $30,000 on the average price, or median sales price, I should say, not average. So you can see, we are tight on inventory still. We have been all year, even January, February, March, leading into our current, whatever this is. So like right now, there's 319 homes for sale in Boise. There's 85 for sale in Eagle. Again, I live in Eagle. It's kind of where my focus is. As far as, I like to know what my market's doing as far as where I live and what my house might be, the value of my house is changing. But knowing that there's only 85 units available right now, as far as single family homes on acreage or smaller lots, I'm kind of happy with that as a homeowner, but I know buyers are having a tough time. So if you're thinking of selling, planning on selling, now's a great time. Interest rates are incredibly low, all-time lows. There's no inventory. Almost half of those 85 homes here in Eagle are new construction. I think it's 49 homes are new construction. So if you have an existing home, there's not a lot of competition out there, and there's a lot of buyers looking. So I know there's a lot of multiple offer situations going on. People are paying over list price, things like that. So it definitely is a seller's market because the inventory is so tight and interest rates are so low. People are coming to the market. They're actually planning. A lot of buyers have bumped up their timeline as far as buying a home. I think it's 41% of potential buyers or people planning to buy a home this year have actually bumped up their timeline because of interest rates. So we'll see how that goes in the coming months. But I don't expect inventory to explode and we have all of a sudden a switch from a seller's market to a buyer's market. People are hanging on. We'll see that in slides a little bit later here. So going on to the next slide, monthly inventory versus median sales price. So you can see the gray numbers are the inventory, or the gray bars. You can see we're way, 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 way down here, but our median price is way up here. So supply and demand. No supply, demand goes up, prices go up. Kind of simple economics, if I remember that from high school correctly. And if you want would you like to see this report for yourself, let me know, send me a message, shoot me an email, and I'm happy to send it to you, or the slides that you would like. Some quotes from some super smart people, basically all saying that prices are going to go up over the next year. That's what they expect anyway. This is not like 2008, the Great Recession. This is totally different. Homeowners have a lot more equity They have the opportunity to sell or option to sell if they go underwater. Well, if they have the equity, they're not underwater. But they have the opportunity or option to sell instead of going into a short sale or foreclosure or anything like that. So some great quotes there. Again, if you'd like this slide, just let me know. What shape the recovery might be. A lot of V, a lot of W. See in a minute that it kind of looks like a W or a V, depending on how you want to look at it. But you can see that the vacancy rate here in Idaho, obviously in the recession, was right here at 2.6 up to 3.8%, but we've been holding steady for a few years here at 1.2%. That's always good. This one, I like this one. The month's supply of inventory for Ada County. So see this gray bar, it says balanced market. That's normal. That's not a buyer's market, not a seller's market, equal. That's where things are equal. You can see we are way down here. And those, oops, I'm sorry. So those numbers, the blue being existing or resale homes, so not new construction, and the orange being the new construction. We have 0.7 months of inventory. So if no homes came on the market, we'd sell out in 3 weeks. That's basically what that means. And then for new construction, we'd sell out in under 2 months. If nothing new came to the market tomorrow, the next day. So we are super tight on inventory. Again, if you're thinking of selling, let me know. Happy to help you. Sell your home for the most amount of money, least amount of time, with as little hassle as possible. You can call me, email me. My information will be at the end or in the description. Distress sales, short sales, foreclosures, things like that. You can see the recession, 2009, 2010, 2011. Way down here is where we are now at 0.6% of those sales. Not a lot, kind of, I want to say normal, but it's floating around the normal number because there are always some short sales, some foreclosures, things happen, people don't pay their mortgage. So, and again, those economists, those quotes I showed earlier, they don't expect a wave of foreclosures basically at all because of the equity that homeowners have these days, or if they own their house outright. So this number is not really expected to grow, even in the first quarter of 2021. So we'll see. But things can always change, but we'll see. Unemployment, oops, jumped ahead again, sorry. Weekly unemployment claims, obviously been big news since March. See, March 28th. You can see we had the largest number of initial claims, but since then it's really kind of gone down or flattened, which is good news. Obviously the continued claims peaked and were less than half the peak, so that's always good. Keep going. If you own a home here and you need some financial assistance or rent, I'll put these links down in the description. But great helpful information here. And like I said, I'll put those in the show description. One of my favorite slides, because I used to live down here in Arizona, and we were always proud of our appreciation over the last few years. But now we're #1 in Idaho. 24,000 is the average appreciation that homeowners enjoyed last year. That's pretty good. Being #1 in that metric. Like I said, it's one of my favorite slides in this whole report, because it just means you're making money if you own a home here. That's just a thing on, this kind of plays to the why we won't see foreclosures. You look at, in 2006, homeowners extracted about $320 billion of equity through refinancing. 80 billion in 2019, so far less. People are not using their homes as piggy banks like they used to, or like they did right before the Great Recession, causing the Great Recession. So people are using their refinancing to either lower their payment or to improve their home to sell, is typically what's going on now. So that's, again, promising news for what's lying ahead as far as the market goes. This is just homeowner debt obviously going down. Savings are going up. Obviously, we got stuck at home for a while. Couldn't go out, couldn't spend money, couldn't go out to eat. Savings go up. Mortgage applications. This is a good one too. These are people applying for a mortgage, trying to buy a home or buying a home. And you can see January 3rd, floating right above zero, kind of using that as the baseline. March hits, we go take a nosedive. But once things kind of get figured out, and it's not going to be, I'm not going to say normalized, but once they get things a little figured out, it goes straight through the roof. We're up 33% from January 1. When January through March, we had, or the beginning of March, our market was on fire. Real estate across the country was on fire. We're up 33% from that number. So it kind of gives you an idea of how many buyers are out there, or people wanting to buy, trying to buy, things like that. Activity here in Ada County. So you can see the dotted line, that's 2019. Solid line is this year, just the first 6 months. You can see the first COVID case confirmed in Idaho. And obviously the nosedive that it took kind of goes in line with that mortgage application number. But you can see home buyer activity has, from that number, gone exponentially, or not exponentially higher, but it's gone quite a bit higher than even in March. So activity is out there, buyers are out there. I'll read the slide actually. New pending sales for existing resale and new construction combined as reported to IMLS, which is Intermountain Multiple Listing Service, what we use to list our homes and share them with you as customers and clients. Shaded areas represent statewide stay-home order and subsequent stages of the Idaho Rebounds Plan. Homebuyer activity was tracking mostly ahead of last year until mid-March, when the first confirmed case of COVID-19 was reported in Idaho. As a result, homebuyer activity as measured by new pendings per week dropped dramatically in early March, but surged ahead of 2019 levels near the end of May. And they continue to stay ahead of 2019 levels. Again, if you're a home seller, a homeowner thinking of selling, planning on selling, it's time to get off the fence. Just saying. Home seller activity. So this is kind of the opposite of the previous graph. New listings for 2019 are the dotted line. Solid line is this year. And again, I'll just read the slide. New listings for existing resale properties only, based on cumulative days on market of less than 7. According to IMLS, shaded areas represent statewide stay-home order and subsequent stages of the Idaho Rebounds Plan. Seller activity was tracking mostly ahead of last year until mid-March, when the first confirmed case of COVID-19 was reported in Idaho. And when national recommendations for social distancing were announced, home sellers have not returned to 2019 levels since early April, keeping existing resale inventory levels constrained and well below buyer demand. Home sellers are staying in place. If they're planning on selling, they decided not to, or changed their mind, or trying to wait this thing out. Not really sure. There's some ideas, and I think that's on an upcoming slide. And the buyer demand is so high out there, and we have figured out how to show homes either virtually or as clean as possible. Social distancing, masks, gloves, booties, sanitizer, Lysol spray, whatever you want to use. We figured out how to do it. We are successful at doing it. We are selling homes doing it. So if you, like I said, if you're thinking of selling, planning on selling, it's really kind of time to get off the fence. You can see this is another good one. Prices, sold prices versus list price, or the percent of list price. You can see across the board, it's just 97.8% in the 600,000 price range is, I mean, these are great numbers. If you're selling a home, if you're buying a home, it's a little less promising. 99% across all price points. New construction, we're at 99.5%. So you can see really the really active areas. I mean, they're all active. Like, it's hard to even pick one out. The $400,000 to $500,000 range in new construction, actually 400 to 600 or more is 100% or more. But then that's at the 600 price point, you're getting into more custom finishes, people wanting, it'll have a list price of say 550, and the buyer comes in and puts 60,000 worth of upgrades into the new build with faucets, sinks, counters, things like that, upping the actual purchase price over list price. So new construction, those numbers can be a little skewed. Existing home numbers are much better to look at, in my opinion. Great quote here. The shrinking supply of lower priced existing homes, more new homes selling at overall higher prices, as well as increased purchase power due to lower mortgage rates, not from speculation, as was common more than a decade ago. That's why we see the appreciation that we're seeing. And let me move my little headshot again. Existing home sales by price range. So the 200 to 400 range in green, obviously that's where we see the majority of our listings or home sales. It's very affordable right now, especially with the mortgage rates where they are. You can see the $200,000 or less. In 2011, it was very high. Right now, it's 0.8% of the market. But the growing metric is the $400,000 to $700,000 range at 27%. That is where I live in Eagle. Right now, the average is right around the 650 mark as far as an average home or average home sale, because there's a wide array of homes as far as starter homes in the 275 to 300 range, up to the luxury homes of $3 million in a very relatively small area. But overall, in the whole county, you have the 400 to 700 range growing not exponentially, growing quite a bit because of a lot of the new construction is priced in that range. And here we go. I alluded to this earlier. Factors limiting existing housing supply. So people are aging in place, possibly because of concerns about COVID, possibly because kids have moved home from college and they continue to need the space that they're in instead of being empty nesters. Investors are holding on to their rentals instead of selling them because rents continue to go up, so they're just continuing to pocket the money. This one, homeowners delaying listing until they find their next home, which takes longer due to the already limited inventory. So a lot of home sellers, if they're trying to move up, move down, they would like to have a place to go before they list their home because they know their home's going to sell quickly. Kind of makes sense. That's what I did last year before moving here. I listed my home in Phoenix. We got an offer, the eventual offer that we accepted, we got within 12 hours of listing our house. 19 hours of listing our house. And then we came up to Eagle and found a home here, and we're lucky enough that there was a little bit more inventory at the time, and got into a great place, and we're very happy and haven't looked back. Let's see. Despite equity and low mortgage rates, some homeowners may not feel that they can trade up from their current home due to increased prices. So if they can't move up, they're not going to move. But with interest rates where they are right now, it's probably a little bit easier. But like I said, despite the equity and low mortgage rates, they feel kind of stuck. Let's see. Surge in refis may have made some homeowners' current mortgage payments more affordable, so they're just going to stay because they might like their home enough to want to stay, and now their payment is cheaper. So why move when it costs less? Potential factor, homeowners in forbearance unsure if they can cover the forborne or deferred amount that would become payable at closing. This is a new one, obviously, because of COVID, and for some mortgagees that have done the forbearance. They got, I think it was 6 months to begin with. They can do another just about 6 months. But all that gets tacked on to the end of the mortgage from what I'm reading, hearing, and what I understand. But if you sell the home and you're in forbearance, that amount obviously comes due at closing as part of your loan. So it might take that extra amount of money out of pocket of those sellers. So there is the potential for that. We'll see what happens. Let's see, new construction. Share of new sales that were new homes. So you can see it's kind of gone up every year. 18, 19, not really. But from 19 to 20, we're up 31%, and we're up 30,000 median sales price. New construction is really prevalent here. The west side of Eagle is being built out, and so is Meridian, south of Meridian, parts of Boise, southeast Boise is being built out. So you can see, they're trying to keep up with the demand, but struggling in that part too. But that is driving why they have so much, such a large market share and large increase in median price. And again, here's mortgage rates. I think this is 1981 is when my parents built the house that I was not born in, but first lived in. And I think because they built it themselves, their interest rate was about 18%. Now we're way down here, 3.2%, insane. So it's very cheap to borrow money. Excuse the noise from my antique chair that I'm sitting in. Purchasing power, so low mortgage rates. So if you're thinking of buying a home, if you're a first-time home buyer and you're thinking of what it might cost, these are just kind of rough numbers. You need to talk to a lender to get more accurate numbers, but a purchase price of $239,900 in June of 2006 with an average interest rate of 6.7 would have cost you $1,236 a month. Right now, $375,000 home at 3.2% costs you $1,291 a month. The purchasing power with these low interest rates is awesome. It's definitely cheaper than renting, depending on what you're looking for and what you want to buy versus what you might be able to rent. It's most likely going to be cheaper to buy if you can. And the demand for housing. The millennials, I was born in 82. Some people say I'm a millennial. I personally don't identify with that. I think it's the Zennials or Xennials kind of group between. We had the analog childhood and digital adulthood. But they're aging into home ownership, and they are driving the market as far as first-time home buyers. Growth in local economy, providing more employment opportunities. See that more restaurants are opening, more businesses are trying to open. Obviously, during our stay-at-home or phased reopening, not a lot of stuff is open yet. Mountain Home Air Force Base, we do actually get people who are stationed out there. They live in Boise or they go out to they live in Mountain Home, but they are a driving force in the market. Retirees are coming here. Oops, missed the bottom. Oops, hold on. It's going backwards. I lost my slide. There it is. In migration from higher priced metros due to our comparative affordability and the potential to work from home. However, it's too soon to tell if or how work from home trends will affect us. But here's where people have been coming from. A lot of companies, big tech companies, just big companies in general are going to start, it seems like, allowing people to work from home on a permanent basis. So they are going to go, the speculation on that is they will be leaving their vertical living, condos, high rises, things like that in big metro areas and going for more rural or suburban locations that are more affordable. And we definitely live in one of those areas, being in Boise, in the Eagle or Treasure Valley area. So it's good for us as homeowners and as home sellers. Again, as a home buyer, it'll just means more competition for you. So be prepared. be pre-approved with a loan, and be ready to go if you find the house that you absolutely love. So we can take a look. This will be our last slide. The total inbound migration flows for Ada County. Let's see, let me move my back. 2013, 2017. So we can see this is based on census. We just did the census, or still doing the census, so we don't have these exact numbers yet. But Canyon County was the largest contributor. Actually, probably all of, if you put all the California counties together, they're probably the biggest contributor. But right now, Utah is one of our largest inbound migration states. California is another big one. Actually, Washington, Seattle, and the surrounding areas from Seattle, a lot of people are getting out of there for various reasons, and same with California. But this is a great tool as a realtor. If you're going to sell a home, this is a great tool to use for marketing your home properly. You got to know where the people are coming from. If they're coming from another state, another location, another county, city, wherever, to know the current trends on where they're coming from to market your home properly. I value this information very high in what I do as far as marketing homes. So this will be the last slide. I appreciate you watching. Hopefully you stuck all the way through it. Again, my name is Ian Wolper. I'm a realtor here in Eagle, Idaho, and you can find me at movetoeagle.com, ianwolper.com. My websites will be in the description. You can call or text 208-514-3476. Let me know how I can help you buy or sell your home here, or anywhere really. I have friends and connections all across the country. So if you need to sell your home in another location, let me know. I can get you a great referral. And if you're coming here, I'd love to help you find the right home. Again, thank you for watching, and I hope to hear from you soon.